The Nasdaq has not sold off this fast since September of 2022. Last week, the Nasdaq fell about 5.4%. The last time this happened was the week of September 16th, 2022. And the next following week, you actually sold off another 4.6%. Here in this video, I will be going over all of your major events, all of your earnings, and how the markets could play out. First up, I think it's important to acknowledge the AI bubble did really truly start to pop on Friday. ARM was down 17%, SMCI was down over 23%, Nvidia down well over 10%, AMD down as well about 6%. There's still a lot of fluff here in AI stocks, and if your AI stock bubble did truly start to burst, well, that's problematic for the markets, not just last week, but for this week, and maybe even the next couple of weeks. The reason why AI stocks, semiconductors specifically, took it on the chin last week was SMCI over the past 2 years has always come out, confirmed their earnings day, and pre-announced their earnings. Like, hey, we're gonna beat these earnings. For 2 years in a row, going back all the way to 2022, they've done this. They did not do this time around. This comes after, well, okay earnings from TSMC. They didn't really give the most optimistic outlook though, and especially bad earnings from ASML. And it looks like at least TSMC, Samsung, Intel, they're really slowing down their production capabilities for GPUs. And then boom, you had SMCI that came out and, well, didn't give us news, which was seen as bad news. Basically, like SMCI is going to miss earnings, Nvidia is probably going to miss earnings. You also had ARM that got downgraded on Friday by David O'Connor at BNP Paribas, and he lowered the rating on the stock from outperform all the way down to neutral. So these events are what really caused the spark in the sell-off for AI stocks. You guys got to remember, the AI stocks this entire time have been priced as if there's going to be massive growth for years into the future. And that narrative has started to get questioned. I think a lot of what comes next will depend on earnings, let alone just the earnings themselves, but the forward-looking guidance. It's not going to be what we have seen over the prior couple of quarters. It's not going to be great, I'm certain. And this could lead stocks to fall further, considering most of, if not all of the rally in 2024 has been in your big tech / your AI stocks. As I have pointed out here on the channel many a times before, the percent of stocks above the 50-day moving average actually peaked out on December 28th at about 86.5%. That was a very strong market rally from the end of October through the end of December. You've actually seen the average stock fall in 2024. So the gains we've seen from big tech and AI have been even more dramatic on an index like S&P or Nasdaq level, considering the average stock has fallen. So AI stocks have not only held the way, continued to cause markets to go higher, but it's also been eating up the loss that you've seen in other areas of the markets. So AI stocks have had a huge role to play in 2024. Same is true with big tech. Last week, we did have our first big tech earnings, and that was Netflix. Netflix did have really good earnings. I mean, they beat subscriber estimates by 45+%. I mean, phenomenal earnings. But they missed on the guidance about $20 million. Super small miss. The stock was down over 8% following that report. And as I have said a couple of times here on the channel, the earnings estimates, just to kind of put this into a comparison, they're way up here. The reality of earnings are probably going to come in like down here. And that can also give you downside in your big tech stocks. Coming this week, we will have earnings, obviously every single day. Monday's going to be a bit of the slow day. So we'll talk about it later on throughout this video, but if we do get a bounce, it's possible that does happen on Monday. Tuesday, you are going to get GM, UPS, GE, Pepsi, Lockheed Martin, Spotify, RTX, JetBlue, and Halliburton. Tuesday after hours, it's Tesla, Visa, Enphase, Texas Instruments, Baker Hughes, Weatherford, Mattel, stocks that really are not going to affect the broad markets. Wednesday pre-market, you have Boeing, AT&T, Humana, Boston Scientific, and Biogen. Wednesday after hours, you're not your first, but your second big tech earnings with Meta, IBM, Ford, Chipotle, ServiceNow. Lam Research reports Wednesday and after hours as well. Lam Research held up a little bit better on Friday than your other AI stocks. They are in that AI stock category. If Lam Research does have bad earnings or gives a bad guidance, well, that's going to hurt your AI stocks even more. On Thursday, you will have in pre-market Royal Caribbean, American Airlines, Newmont, Altria, Caterpillar, Southwest, Bristol Myers Squibb, Mobileye, and AstraZeneca. And after hours, that's really your big day as far as market cap of the S&P and the NASDAQ. You'll have Microsoft and Google reporting earnings. If either one of these guys fails on earnings, that's problematic, okay? Very problematic for the S&P and the NASDAQ. You will also have Intel, another kind of deemed AI stock, so that one could be important also. Snap, Roku, Western Digital, Dexcom, T-Mobile, Gilead, and then Friday you have some oil and healthcare names. The expected moves this week are quite large as well. Tesla up over 10%, Meta sitting here at about 9% plus or minus, Google at about 6%, and Microsoft 5% plus or minus. So you are expecting a big move, and what we've seen last earnings season is what the market makers were pricing in is what these stocks tend to move on earnings. Sometimes you can get a larger drop or larger rally than what the market makers are pricing in. But typically what the market makers are pricing in, well, last earnings at least, that's what happened. So if this is true and you get a 9% plus or minus move on Meta coming on Wednesday, you're going to have a big sympathy move coming on Thursday with your other big tech stocks. Same with Google and Microsoft. At the same time, you have these elevated valuations and really elevated expectations for 2024 and 2025 earnings on the S&P 500. You also have the 10-year Treasury yield that has been quietly, not so quietly really, marching higher, now at 4.62%. So if you get companies that are not coming in with the greatest guidance or greatest earnings, you don't have a 10-year Treasury yield that is falling. You don't have a 10-year Treasury yield that is low. There is another alternative than just being in stocks right now, and that could help drive some money out of our markets if earnings season does disappoint. News is we really didn't have any big geopolitical tensions or problems over this weekend, so I would say that's a positive, and there's really not any big news that the markets are reacting to heading into tomorrow. Now, I will say, even though you've seen the NASDAQ down over 2% on Friday, it wasn't bad across the board. The Russell 2000 was actually up 0.25%. And as you can see here, the percent of stocks above their 50-day moving average actually went up almost 4% on Friday. So if you do see big tech and AI stocks give back a bit, which is my expectation, you're just going to see a rotation into other areas, into healthcare, into energy, into small caps, into mid cap stocks. I guess the unfortunate part, if you're an S&P or NASDAQ index investor, is those other stocks that money's going into, or at least did on Friday, it doesn't control or have a large market weighting at all in the S&P or the NASDAQ. So you could see just a rotation out of big tech and AI, and you could see the S&P and the NASDAQ headline fall, and other stocks do very well. So that is a situation you also have to consider. The S&P and the NASDAQ could continue to fall, and money just goes into the Russell, into healthcare, into oil, so on and so forth. Now, I will say this is one of the most aggressive sell-offs that you have seen in recent times. That's because like the last 3 days have been, down 1.22%, down 0.57%, down 2.07%. 2 days before that, you were down 1.65%, then down 1.5%. It's been a pretty aggressive sell-off to the downside. Now, what tends to happen, if you look at the RSI down here at the bottom of the video, anytime you get to about 30, you tend to bounce, right? Even in some of the most fearful markets you've seen in 2022, you tended to bounce every time you got to 30 on the RSI. In fact, right now you're at 29.78. So that's basically saying on a relative strength basis, this is a aggressive sell-off. Even though you're still sitting with some pretty big gains for 2024, it wouldn't surprise me to see a bounce maybe in the beginning of the week. The big test here and what you really want to have on your charts is this 100-day moving average here on the NASDAQ at about 422, and then your 200-day moving average down here at 395. If you do bounce, then it's likely you could test the 100-day moving average to the upside or get pretty close to that range. 420 is going to be a pretty important level as well to be watching for. If you get rejected there on any bounce, that's not going to be great. And it's possible you could trade sideways here for a period of time before falling down to this 200-day moving average. Now, it will depend how earnings come out. If big tech earnings are outright bad, then I would expect you're going to fall under that 200-day moving average. If big tech earnings are good, but maybe not as good as expectations, then I would say maybe your 200-day moving average would be a good level to hit, and then stop out and maybe start to rise from there. But I am expecting some downside after a brief period of consolidation or a brief bounce. You will also have some data this week. Starting off on Monday, you will get the Chicago Fed National Activity Index. This comes out at 8:30 in the morning, expecting slightly positive numbers here, and they've been negative for quite a while. I'm not expecting that's going to move the markets all too much, but it is a possibility. Now, on Tuesday, you will get S&P Global Composite PMI. That will come out at 9:45 in the morning. S&P Global Services PMI as well at 9:30 in the morning. New home sales at 10 a.m. and new home sales month over month as well coming out at 10 a.m. Richmond Fed Manufacturing Index also coming out at 10 o'clock in the morning, and Richmond Fed Services Index also at 10 o'clock in the morning. So that's really it for your Monday and Tuesday. Wednesday, you will get durable goods orders. Now, I think a lot of people forget the reason why stocks have done well in 2024, not your average stock, not your interest rate sensitive name or your mid cap, but why the S&P and the NASDAQ headline have done well is because the narrative is people have jobs, economy is strong. That means people are going to spend money and drive earnings growth in the S&P 500. That's the simple logic that the bulls have right now. If the economy does get worse or people stop spending as much money, well, you kind of got to question that narrative, right? Durable goods orders, you're expecting 2.5% positive month over month. Last month came in at 1.3% positive. And if you're looking at a month over month basis, that's a very strong number. It's not like last month was super negative, right? So you're expecting a very strong durable goods orders number. We'll see what happens. If that comes in good, that's going to be good for the markets. If it comes in bad, that's going to be bad for the markets, but be good for interest rate sensitive names. If the economy gets worse, interest rate sensitive names are going to start maybe outperforming, and maybe your S&P and your NASDAQ headline are going to start doing a little bit worse. Now, Thursday, you are going to get the GDP growth rate quarter over quarter advanced data for Q1. You're expecting 2.5%. Last quarter's number was 3.4%. So you are expecting a little bit of a slowdown here for the GDP growth rate, which is kind of to be expected after last quarter was 3.4%. So 2.5%, that would still be a very strong number. But what really tends to happen is you get this first number, it comes in strong, and then the next two come in lower. Like last quarter's, it came in at like 4.9%, the first number. The second number dropped to 4.2%, and the last number dropped to 3.4%. So you do tend to get a drop after that first initial estimate. And that data does come out at 8:30 in the morning on Friday. You will get wholesale inventories, initial jobless claims, good trades balance, core PCE prices, quarter over quarter, GDP sales, real consumer spending, all kinds of different smaller data points. Even the Kansas Fed Composite Index and Kansas Fed Manufacturing Index coming out there at 10 o'clock in the morning as well on Thursday. So Wednesday, Thursday, Friday are going to be big days. Friday, you are going to get your biggest data. That is core PCE month over month, expecting 0.3%, unchanged from last month, and personal income month over month expected to come in at about 0.5%. Last month was 0.3%. Personal spending expected to come in at 0.6% month over month. Last month was 0.8%. So there's really going to be a lot of moving parts this week down to the data, especially towards the end of the week. Big tech earnings with Meta, Microsoft, and Google as well, Wednesday and Thursday. You also have Tesla. I don't expect Tesla's going to move the broader markets too much. Tesla's kind of just been dying in 2024 anyways, so I don't think that one's going to be a huge deal for the markets, but it's possible it is. I do think the biggest test for your AI stocks is potentially Lam Research for this week, at least on Wednesday, and then Intel on Thursday. But I am expecting more downside here. Again, with a brief consolidation or bounce period, considering stocks have fallen a lot quickly. The RSI getting down to 30, it's pretty common that you do see a bounce. But again, this time is very different than others because the headline S&P and the NASDAQ have been going higher recently in 2024 because of AI stocks. If you start to question, what's the growth going to look like for AI stocks, for NVIDIA, for, all of these other names, then maybe you could just continue to fall, right? This is kind of uncharted territory that we are in, and we'll see how much the AI bubble does actually deflate if we do have to wait until NVIDIA earnings. That's maybe the final dagger in the coffin here, but the setup really doesn't look great heading into next week. If you did want to take out some puts on this market, if you did want to maybe even sell some stock, hedge in some way, shape, or form, I think you probably want to wait for a short-term bounce here because I do think ultimately, if the economy does get worse, if geopolitical tensions get worse, which is really not my base case, at least for geopolitical tensions, if inflation does continue to ramp up another month or two, I do think inevitably we could be falling much lower than where we are today, maybe down to the low 300s on the NASDAQ. Maybe you could go back to 2022 levels if earnings disappoint, if inflation comes in high and the Fed's not able to cut rates. I think there could be a lot more downside here over the next couple of months. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.